Good afternoon, and today is October 11, 2023, and it's a Wednesday, a midweek. And today is the day before we have a big, high impact news gonna release tomorrow, which is Thursday, October 12th. We had a CBI released at 8:30, so we try to get up early and get ready for this move. We will try to recall the move around 8:30. Okay, so we can review a little bit how the market moved on the last CPI, right? So it will be very interesting if we can do that. Let's see. We can say CPI report 2023. So basically right now it's a raise 6% August, but we want to see what a CPI No, we got lost right here. We want to see the one that it gives us the date. Okay, so this one gives us what we are looking for. October 12th. So last one is September 13, right? September 13. Let's see if we have any reference on September 13. Yep. So let's take a look what we have. Yep, we have some screenshot. So this is how the CPI release. It is on 1 minute time frame. So the first move right here, we mark the buy side and the sell side. Then we see that it make right here you have a total sub setup for it right there, so it's gonna be 4 breakout, and then it move all the way here, is retested auto block, and I think the uptrend still intact, right? Even though it's break the structure right here, but it just stopped right there and reversed right there. So basically a range there right there. Let's see what else we have. Last time the CPI move. Okay, so it's quite interesting, right? It moved up and then it come back down at the order block level right there. Let's look at the 5 minute time frame so we can have. Okay, so here's our initial move. Okay, and then it's kind of range right there. It go back to this, move up, and it make another total support right there. Beautiful. short setup right there for turtle soup. You know, it's a 4 breakout. We short them, it come down right there. So we better wait around 13, right? 13 hours to short them last week. I mean, last CBI release right there. Let's look on the 1 hour time frame. So this is our 1 hour time frame. So the first hour right here when the CPI release, it's very long week right there. Look at that. So we can identify that maybe right here, this is turtle soup right here. It's the level that is create a 4 break right there. It's in a downtrend, right? Yep. We still not see anything notable. So how do we trade this week then, tomorrow then? So basically here's the Wednesday, September 13, right? 2013 is the last CBI release. So basically it's the first 4 hour, and then this is the London right there. So how do we trade this? Oh, look at this candle. Okay, you can look at this candle and mark this one. All right, when it come back, you put a buy order right there. You can pull it up right there. See that right here with a buy order. So this level is the turtle soup. So basically right here, is our turtle soup long setup. So we put the buy, when it down here, we put the buy stop right here at that level. Because of the screenshot, so we don't have exactly, but it's around 455.50 right there. So basically we do like this. Oh, this beautiful setup give us some idea how to trade this turtle soup, right? Long setup, and we have a buy stop at 450. Wow, it really dropped right now. Is today is close around 436 something, but this one is back in September is 445. 545, let's say, maybe right there. So maybe 30 right there, the exact level right there. So right there, you put a buy stop right there, and when it pulls up, it will execute you. It will execute our order there. Don't go in when it's have the first move. Go in when it's have after the first move. The first move only the manipulation move. In this case, manipulation it tries to get the buy side liquidity and then it go up. So you see that that's our setup that we look for tomorrow then. Okay, then now go back to the 4 hour chart. At least we have something to go forward. Okay, we have some thing right here. We need to remove them real quick. Okay. Wow. So yeah, we mark out the sell side right here. If we saw tomorrow it came down and rate the sell side, then we will use that this level at a go long turtle soup, which is a force breakout. But if it become a real breakout, then we switch side. Remember, we learned a lesson from yesterday on Tuesday, right? That if we have a trade idea and we try to implement that trade idea, and we saw that the market is reject the idea, and market tell us something different, then we gotta listen to the market. We not try to be right. We try to be flexible. People say, don't try to be right, just try to make money. But I still not sure I comprehend the second part of try to make money. So basically try not to be right? Just try to listen to markets. If we have a thesis, a trade idea, and we feel like the market tell us the other way, then we have to stay open, right, humble, and flexible enough in order to change our mind, change our position right there. So we don't get stuck in the mindset that we got to be right. Because someone said that the market is always right. So we have to accept that. We have to surrender our opinion right there. We listen to the markets instead of impose our opinion on the markets. So that's enough. Okay, so you see that we can mark this right there. And also we mark the high. I think this level are also key right here to see how it react to those two levels. But you can see that something in the air right here. You see this candle? It's the engulfing candle. I mean, it take both. It take the sell side and the buy side of this candle. So this candle tomorrow we're gonna use as a reference point for it, or pivot location in order to see how the liquidity run based on this candle. A very surprise move, right? For today, it's like the V shape right there. Because right here we see a fall breakout, we go in and we short them, and right here is another fall breakout, but it's in opposite direction. We thought it's gonna break that level, but it did not. It tests one more time and it go back. So the people who go in a short right here got stopped out. Got a lesson to learn right there. Yeah, but right here you see the Fibonacci gap like that. It really fill that Fibonacci gap and go back up. But tomorrow, tomorrow Thursday, we may trade on Thursday, or we will wait on Friday. But if it go down, I believe that it's gonna we believe that it's gonna fill this Fibonacci gap. It's a huge Fibonacci gap right here. It's gonna fill that Fibonacci gap. That's our anticipate right there. Yep. Very interesting to see. Very interesting to see, Alice. Okay, now go back to the 5-minute chart so we can see that. So basically it's a V shape, V shape liquidity run right there. Is a down move and around 1345. Yes, so we need to pay attention for this, because you see right here level can give you an idea that it's a perfect setup for what, for turtle soup for breakout right there. You see that? Pay attention to level 433.40, right? That level right here. You mark that, and when the price moves down, you put a buy stop, and when it go up, it's better. Let's move with a candle of 445 right there, right? And then move up, it catch your order, got your order view, and then it's rolling back up. It never look back from there. And the risk we take is very low risk right there. So I think turtle soup is perfect setup for a low risk trade right there, and that's what we try to incorporate turtle soup into our trading system that we try to develop right now. By the way, it's set up right here, right? Okay, let's go back to the trade, that the practice trade that we took today, and review it to see what lesson we learned. Okay, where is our journal, right? We got it. So basically, okay, so the first setup we have is, bullish breakout, fairly up, retest up, and we saw that setup form on a 5-minute time frame. Let's see how it's, let me close all of this. So right here, around 8:30, 9:30. So we saw this setup, and we saw that it's a swing low right here, and did a bearish breaker, and you see the huge displacement right there, and huge follow gap right there. So it's a very high quality or high properly set up for you or for us that it's gonna retest this area. So we put in the trader there, and it's a very low risk right there. And we saw this. As soon as we saw the buy side liquidity rate, then we think that's a good entry. We're going right there. Right, and the target gonna be the London low. I mean, or at least, the sell side liquidity right here. Let's see how it turns out. Okay, on 1 minute, so we go in at this candle at the 9:35. So up 5 minutes after it open right there. So 5 minutes, and we have the buy side liquidity rate right there. And we have a sell side that we were trapped right there. So that's where we're going. And our stop loss is going to be 436.50, right at the level, 5 cents above the 436.40 right there. I mean 46 right there. And our target is at this level right here. The sell side liquidity right here is 434.90. That's around this level right there. Yeah, and our risk reward is 1 to 4, right? We risk 30 cents, and we're gonna take $1.35. And actually, we hit our target. We go a little bit. We go in here, and we are experiencing a little bit discomfort right here when we go again our position, and again one more time right here, right? and then it go back right here, right? Whenever it's swing high, we got a little bit nervous right there, but we try to tight it through, right? The golden rule in trading is that what, cut our loss and let our profit run, and that's how we should approach, because that will increase our expectancy for our system. That allow us to be right less than 50%, and we still profit right there. That means we allow ourselves to make a lot of errors, more than 50%, and we still end up profits. So the golden rule is cut loss. That means we try to go in where we risk very low risk right there, and then let it run. But it will either hit our targets or hit our stop loss, and then we have a successful trade right there. Successful trade, that means that we follow our rule. It does not mean a winning trade, right? The successful trade is that we don't make errors. Error in the sense that we don't follow our rule. So that's the idea. Okay, let's see, it hit the target, but actually we let it run. We will make more money right there, because it go all the way down to the 4-hour time frame self-stability. So at the same time, when we saw this setup on the 5-minute time frame, we saw the total subs, also short. So it's confluent right there. So we have two options right there. All right, as soon as we go in here, we saw the total sub setup right here. This is the total sub entry level short right there. Saw right here, and as soon as it go up here, we put the buy stop right here, and you see execute that order, and you see that it never looked back, it never tested. And the beautiful right here, you see, right? We know that, the level right here, it tests one, and it tests twice right here, and look like, it closed above, right? Someone will say, oh, so the novice trade people are gonna go in and say, oh, it's a breakout, so I'm gonna go in and buy. The minute they go in to buy, they got a huge, down close, stop them out right away. Or if they put stop loss down here, they're gonna pay more for the mistake right there. But anyway, as soon as we saw this, we put a sell stop right there at 436.37, which is right here, the level. So the entry time for us, the time that we got our order fill, is 9:38 right there. So we see the risk reward is 1 to 10. But if we let it run, it will run up to 1 to 18 right there. That's the huge trade. That's the reason why we have to practice the rule, golden rule, that cut out a lot and let profit run, and go in with the low risk trade there. At the same time, we saw at 9:30, we saw a diversion in smart money technique right here. Basically, the QQQ make a high, but in this case, it's simply just the buy side liquidity rate before it go down, and the QQQ and the SPY make a high low. So next time we saw the pattern, then it gives us a supporting evidence or signal that the market gonna sell up. So we can have more confidence in our trade idea that we're gonna short them. So the first targets, right, it for 34.86, that's the first targets. Right here, the set liquidity rate. We already covered this. And then what else? The second target, which is the same with the prior day low at 434.48, and it hits at the time 11:18, right? So that's 11:18. Right here, 11:18, it hit the second target, which is the London low, right? And the prior day low right there. Let's look on the 5-minute time frame so we can see 11:18 how it hit right there. Where's my okay? So right here you see the London low right there, and it hit at 11:15. On 1 minute it's 18, but on 5 minutes it aggregate at the candle 11:15 like that. So I check the London low right here, and the previous days close, right? Previous always level, it cooked. It the same with the London low right there. So I think we make a little bit type error again, not previous day low, but it's like low. So it's around 434.48 right there. And the targets which is 434.10, it hit at this level 434.10, which is a 4-hour order block right there on high time frame. Yep. And let's see how it's go low, how low it go. And the final targets with the 4 targets, it go all the way down 60 hold on, 433.63, which is the sell side liquidity for this 4-hour time frame right there, and it hit at 12:53 right there. On the 1 minute time frame, it is 4-hour time frame. So basically we do all this exercise in order to have her to define our target in the future. I mean, it's not exactly, right? Market will never say, but it gives you the pattern and the variation right there. So we have to be flexible with the variation. But basically, you want, as soon as you search for breakout, you want to aim for the for the 4-hour candle sell side liquidity at 13 hour right here. So that's the best target right there. And also we need to see, so also time update right there. So the X6 time is, we should, so here's the lesson we learned, right? We should we should stay in the trade, right? In the trade for the 4-hour, right? Candle 13 sell side liquidity, or until around 12:30. So give us some run to run right now. So we either wait for it, get this sell side liquidity, or wait until 10:30. We have to get out. Otherwise, we'll be in trouble right now. All right, another setup we see is right here, and this is very short trade, right? But it's a beautiful setup. You look at this, and we have a reason right here. You see that? You see we put the total long setup rate at this level. We try this level, but it's not reliable. We see right here, the total sub level at 434.6 is better than 434.78. The reason why, because there are weak, the candle with a long wick. So this level, the sell side liquidity for this candle is much better reliable than this one. So next time we saw this pattern, we give more weight, more favor from the sell side liquidity for this candle than the other candle. So that's the idea right there. So when we identify this level, then you can put a buy stop right there. When it breaks through the level, we put buy stop. And you see how it's, come back right away and get out of view, and then we never look back at the level. But the next trick for us is, what is our target? Because this is a quick, buy side liquidity rate, right? So our target should be around is there, because you see this auto block and fatal gap right there. So we have to put our target, a quick target around here. And he hit it. We need to better get out, because if we don't get out, we got stop out right there. If you come all the way down again, if we're gonna sweep this sell side really, and if you look at the chart, it does exactly happen right there. Okay, right here, right, that's right there. It come back, and you see it sweep that sell side really. And if we don't get out right here, we're gonna pay the price, because it sweep at 11.18 right there. We are not there at that level. Yes, that means we can in and out at exactly location. That's our end goal right there, but I don't think we're not there. Yes, even though technically we can understand, but the mental game is critical. Our mental game is not there. I think it takes another 5G or 10G in order to reach at that level. I mean, that's we are kind of conservative right there. But if we are hit a breakthrough, that maybe come to us in 3 years. So let's see. We just do the work, follow the process, right? The outcome, we let the markets take care of that, or in other words, let the universe take care of that. We do the work. We put in the trust. We trust the process. I think we run out of time, but I want to cover one more beautiful setup right here. It's a long setup total soup, and the risk reward ratio is huge, humongous. You see right there, you reach 21 cents and you get $2.78 right there. Okay, right here, you see that we have 3 time to entry there. As soon as we mark the so-called support level, right, we put a buy stop right there. So we either entry time right here at 13:36 or 13:40 or 13:55. So we get our order fill, and then you can never look back from there. When you see that, we reach only 21 cents. Yep, and we get the huge reward right here. I think we got huge reward. You see from here to there, that is exactly what we get. All the way here, right? Or at least we took M at the open at 9:30. Look at that, $2, 79 cents right there. And you look at this, it's 1 minute, and if you look at 5 minutes, you saw that setup also. Right here. So it happened right here. You remember I did mention a little bit right this level right here, around 433.40 right there. When it moving down right there, right, this is kind of when I will put your stop loss, buy stop right here, and we got our order fill, and it will never look back. Just beautiful right here. and lots of people got trapped because they thought it break the level, right? It closed below that. So we're gonna chase in here, and that's the 4 breaks is come into play right there. But remember, this trade is very low risk. Look at that. We already see that. Very low risk. We put our stop loss of 5 cents below this one. And boom, it go up. Alright, I think that's it for today. And yep. Thank you for your time, and have a wonderful evening, and we're looking forward tomorrow. Huge, big release new for this week, or also for this month. CBI released at 8:30, so we try to do some recording at 8:30. People want to watch in real time how the liquidity run when the new word release. Alright, thank you, bye for now.